Let's bring in Irwanti, CIO at Schroders Indonesia, which manages funds aggregating about $5 billion. Irwanti, good to see you again. First off, we have confirmation that Prabowo will be the next president, but most certainly there will be some people up in arms, likely to be contested. Do you think that will weigh on sentiment?
Yes, that will bring some small sentiments, but I don't think it's fundamental or structural, and that won't bring too much impact to the market because I think the result has been quite obvious and the gap is quite significant. Hence, we don't think there will be changes in the result. There will be some protests here and there, but it won't be anything significant, Haslinda.
Yeah, but you got to consider as well the risks from his cabinet. We've yet to see how that may look. We don't know yet who the finance minister is likely to be. We don't know for sure what his policies will look like as well. So aren't there risks to that optimism you're expressing?
That's true. That's why it's very important. There's a lot of expectation coming from investors, local and also foreign, that the new cabinet will be maintained more coming from the professionals. Those are very important, and we are still waiting whether the new finance ministers are the ones that will be very well accepted by the market. But I think it's the key coming from the new government that they show the new cabinet lineup will be coming from professional and technocrats.
So how's that guiding your portfolio? How's that guiding where you're putting your money?
It is clear, regardless of the cabinet or policy, that the new government policy will be more pro-growth. That's why there is an expectation that they will revisit the fiscal deficit, and most likely it will be higher. So that implies that there's more optimism in the equity market rather than the fixed income, as the previous government has been opting more towards stability over growth. And we are expecting pivoting coming from the new government, that they will focus more on growth rather than stability. So that's why if you look at the foreign inflows and outflow, we are seeing outflows from the fixed income market year to date. But on the contrary, we are seeing quite a significant inflows going into our equity market this year. So we expect this will continue, the trend will continue going forward, and we are all waiting whether the fiscal deficit will be lifted to what level going forward.
So if you're expecting the trend to continue, do you take money out of Indonesia's bond market and put it into the equity market? Is that the strategy to adopt right now?
It doesn't necessarily so, Haslinda. We think that the current valuation of government bond yield still remains to be favorable. If you look at the 10-year bond yield, the real yield right now is still almost 4%, and it is still one of the highest across all the emerging market fixed income bonds. So on the valuation side, yes, there is a downside risk if the government decided to pivot on the fiscal deficit and the growth policy. But valuation-wise, we are still one of the most attractive compared to the other emerging market basket.
When it comes to the bond market, though, Irwanti, people say there are better alternatives like Korea, like India. Why put money in Indonesia where there's still a lot of uncertainties, the risk is higher?
Well, if you look at the government debt to GDP ratio, we are still one of the lowest. So my thinking is, even though we're lifting our fiscal deficit, it doesn't mean that our fiscal macro balances will deteriorate. We are still one of the lowest debt to GDP growth. And I think it's still premature to expect that the new government will do irrational spending or they will lift up the fiscal deficit to a very risky level. We are still in the expectation, our base case scenario, that the fiscal deficit will be only lifted slightly compared to the current level. So it is still very premature to expect that the government will do aggressive spending policy going forward. And I think the governance of the spending is the key. If the government spend it to a productive spending, if the governance can be accountable, then it's actually a good story for Indonesia market going forward.
Irwanti, just one final question on the rupiah. Where do you see it headed? We know that the BI, Bank Indonesia, is waiting on the Fed. What do you see the BI doing, and what do you see the rupiah doing?
Well, unfortunately, it is more of a US dollar strength right now. So I don't think BI will do any action before the Fed is confirmed that they will cut rates. So our best case scenario is BI will not do anything until BI start cutting rates, which is it will be during the second half of this year. And if you look at the recent trajectory of inflation, there is a little bit of pressure of inflation coming back. So the disinflation has been quite delayed. So I don't think BI will do anything until they are sure that the global inflation will come down and the Fed will start be cutting rates, which won't be until the second half of this year.
Irwanti, CIO at Schroders Indonesia, we thank you so much for being with us today.